Hello everyone, my name is Oleg and today we're going to be making a video about 3 different stocks that I love investing into and holding on to long term. Let's go ahead and get started. This video is going to consist of 3 different parts. We're going to talk about some statistics, I'll show you guys my Roth IRA portfolio, and we're going to talk about those companies that I promised you that I'm going to review. Quick disclaimer that I'm not a financial advisor, not your financial advisor. You do not have to follow my lead and invest in the companies that I'm investing into. This is solely my opinion and I'm just sharing my opinion with you. Have you ever thought about how many companies are publicly traded companies in the entire world? There's actually more than 360,000 publicly traded companies that offer shareholders a portion of their company. There's 149 IPOs that were released back in 2019. It is quite hard to figure out which kind of company you would like to invest into, especially when it comes down to narrowing down to one company. Not a mutual fund, not an index fund, not a diversification into a multitude of different companies. But right away, you make your own decision of what kind of company you want to invest into. I'm going to share what I look into when I'm searching for a company that I want to invest a portion of my money into. Right now, I'm going to go ahead and log into my Roth IRA account. You will be able to see that I'm investing into a lot of different companies. There are some utility companies, there are some fossil fuels companies, there are some tech companies, and a lot more. Those companies are paying a significant percentage of dividends for me every single month. I'm investing into them because I see value, and I'm also investing into those companies because I think it's going to be a long-term investment. We'll go ahead and start off by pointing out 3 different companies that I think are the best fit for a long-term investor. And the first company that I'm going to point out is going to be Waste Management. For each one of the companies that we're going to discuss, by the way, we're going to look into my computer, hop on the screen, we'll go over financials, and we'll talk about details of that. So Waste Management, let's switch to my computer. So Waste Management is not trading right now because it's Saturday, but the market closed yesterday and Friday with $100.27 per share, and with the dividend rate being at 2.23%. Let's go ahead and look at the historical data. So this company went public back in January of 1988. It's been growing ever since, and then during the dot-com bubble, it ended up dropping in value and was basically trading at the same level as it was during the very beginning of it being public. And then it consistently started growing. We had some peaks, we had some valleys, and then it recently ended up making double tops, which means that it continually grew up until it created 2 of the highest prices that it's ever traded at. And then the volatility came to the market, and then it recently started dropping, and it dropped to 100, right? So it's basically trading at the same exact level as it was trading at the beginning of 2019. With a PE ratio of only 25.64, which is not the lowest one that you will be able to find, obviously, but I do think that this one is actually a somewhat reasonable PE ratio to have in your long-term portfolio. Let's go ahead and look at the full screen chart, and we'll be able to see a little bit more details about the recovery and the drop of the market. It is always hard to predict where the price is going to be going, but with this current rate, what would be the best approach for you to take? For me, the technique that works is dollar cost averaging. So I'm currently just buying and holding on to it for quite a long time. Let's go ahead and go back and look at the financial aspects of this company. As we can tell, if we scroll down, we'll be able to see that during first quarter of 2020, they've already lowered their expectations for the dividend payouts, and we will be able to see whether they're going to meet those or not on the date when they're going to be paying out the dividends. With the consistent growth of this company throughout the years of it being public, I think that this is one of the best companies to actually trade and potentially just hold on to for a very, very long time. Second company that I would like to talk about would be Coca-Cola. A lot of people are familiar with Coca-Cola. They know that they pay dividends and it's a fairly steady investment during a recession, during normal economic times. The Coca-Cola company is currently trading at $48 a share. It pays 3.5% in dividends, and its PE ratio is actually very close to Waste Management. While the company ended up losing about 30% of the share price from $60.13 all the way down to $38.30, it was able to successfully recover about 50% of the losses, and it's currently trading at this $48 range. So with this being said, the company was able to successfully recover from the dot-com bubble. It was able to recover from
2008, 2009 financial crisis. And ever since then, it was increasingly growing its portfolio, its balance sheet, and it was making more money. So on the long term, I do think that this company is something that is definitely should be a part of at least my portfolio, and I'm going to be looking forward to the dividends that they're going to be paying out within the next couple of months.
The third company is going to be AT&T. A lot of people are also familiar with AT&T. They know that the company existed for a very long time. P/E ratio is good. Dividends they pay is also pretty good. So we'll go ahead and look into the numbers on my computer.
In comparison to other two companies, AT&T actually pays about 6.9% in dividends, and the dividends tend to obviously fluctuate based on the earnings reports. But also this company has the lowest P/E ratio out of other two companies in this video. It also is capable of showing the long-term growth. So this is one of those companies that I think is also a fairly recession-proof company. While it obviously from the high of $41 it dropped to $27, so that's about a 40% drop. It still was able to sustain that same exact price that it was targeted at, right? Evaluated by the market. So while you're searching for the companies that you particularly might be interested in, you will need to consider and see what the history of the company looks like. If the company has actually gone through a recession or a depression, then we will be able to see that this company will potentially be able to recover. Not 100%, but at least they have an experience of dealing with something that they've gone through in the past. We'll go ahead and look quickly at the full screen chart of this company, and we'll be able to see that yes, it did significantly tanked. It bottomed out right here at about $28. It's basically a support of previous resistance. So this shows resistance, this shows resistance. Some of this consolidation also shows resistance. It was actually dipped below that support that previously was resistance and was able to slightly recover. So right now we see that it's recovering. We don't know whether it's going to go all the way up to the previous highs. Maybe it's going to make lower lows, but based on the long-term trend of this company, we can see that this company has experience of recovering from recessions and from previous dips of the market.
And so with this being said, I hope you guys were able to find value in this video. If you did, don't forget to smash that like button below, subscribe for more, and I'll see you in the next one.